Hey everybody, welcome back to the channel. Jimmy here. So in today's video, I'm going to share 3 tips with you on how to stay sane when there's a downturn in the market. I know we've all been beat up in the last few days, a wild pullback in the market, but there is some great opportunity for buying, and if you don't panic and you take that deep breath and you keep moving forward and just take it day by day and just deal with what's in front of you and try not to think about the long term right now, just try to manage what's right in front of you. I think we can stay the course. I think we can ride this out, and I think we can see some big profits on the other end. So what I'm going to share with you are 3 tips that I follow anytime there's a downturn in the market, or anytime there's uncertainty or an unfortunate tweet or anything else that can cause the markets to sort of pull back. Sometimes the pullback is unexpected. Other times you kind of see it coming and you think, it's not that big a deal. It's just a little drama that I think will resolve. So in today's video, we're gonna get into those 3 tips. And at the very end of the video, stay tuned to the end because I'm gonna share an awesome stock pick with you guys. Something happened today in a company and it kind of went crazy. It caught my eye. I did a little bit of research on it. It's encouraging and sort of funny at the same time. So I wanna share that with you as well. And hopefully we can all have a green week. So stay tuned. All right, tip number 1. If you have profits on a position that you're holding, one thing that I will do is consider trimming some of that size. So let's say you have 100 shares of Apple. And let's say Apple's up and the market starts to downturn and you're taking a little bit of a hit on it, but you still have profits. Sometimes what I'll do is I'll just trim my position a little bit and take a little money off the table. Now, depending on who you are, you might decide, yeah, I like to take half my position off. Or some others might say, you know, I really like Apple for the long term, so I'm just gonna take 10% off. Typically a good rule of thumb for me, to take a quarter of my position off is a great way to take a little bit of cash, put it in your pocket, sit tight for other buying opportunities, and that way the downside might not feel as bad. Now, if you're totally bullish on your stock, whether it's Apple or whatever, and you're fine just riding it out, then by all means, don't trim any off. But if you want to ease the pain a little, claim some of the profit you already have, take a little money off the table, I recommend just trimming your position a little. All right, step number 2. This one's a biggie. This one's probably the most important rule for me personally, and that is anytime there's a downturn, anytime that there's uncertainty in the market and I'm looking to go long a stock, I want to make sure that I truly believe in that company. I want to make sure that some of the fundamentals check out. I want to make sure that price action looks good over a historic period of time. I want to make sure that the company itself is solvent and not having any strange activity. I don't want the CEO to have just left or there to be ambiguity in a new product that they're coming out with. I want things to be pretty solid and stable with a company before I'll take a position during a time of uncertainty. So that is tip number 2. And finally, tip number 3, for me personally, how I manage my stocks, different positions during downturns. Tip number 3 is if I have a position and it's been beat up pretty good, but the company fundamentals are good and I still believe in what they're doing and I don't want to get out, I do want to hold that position, I don't want to trim it, what I'll do is if we get an excessive dip like we did yesterday, the day before, the previous week, whatever, what I like to do is add a small bit to my position. So specifically, I'll give you an example. Etsy got really beat up over the last few days. They missed their earnings barely, but I felt like it was over dramatic when you compare it to missing earnings in the past for Etsy. So today I said, okay, I have to hold myself accountable for this because what I like to do is add a little bit of size to my overall position when there's a big pullback, and we've had that big pullback, and I kept saying to myself, is it gonna go lower? I'm not quite sure, what should I do? And today was that day. I said, okay, you've got to do it. So I just added 50 shares to my position at a lower price, so my cost basis was reduced. Cost basis reduction in companies that you believe in can be a very positive thing once we get through this pullback and we get out on the other side of what's currently happening. So that's rule number 3. So I think if we follow those 3 tips, That's a good way to kind of keep you in control, keep you sane, sort of keep you moving forward each day in this crazy turbulent market right now. And then once we get to calmer times where the market continues to show growth, we'll all look back on this and say, gosh, I'm glad I kept my head. I'm glad I didn't just fire sale everything and get rid of everything. I'm glad I stayed the course, kept my head, used fundamentals of the company, used my personal opinion on do I like a company or not, and just stayed true to what you're comfortable with in terms of different companies. This is a time of uncertainty, and I know it's easy to feel panicked. I know it's easy to feel alone if you're down on a position. I guarantee you everybody's down on a position, so it's just a tough thing to sort of stomach for people. So let's just keep staying positive, keep checking in with the channel. We'll keep talking through these things. I want to help you as much as I can, and your comments help me. So I'd really like to interact a lot, especially with this video, because I think the more that we talk and share and support each other here on the channel, it'll really help us get through a rough time like this pullback without it being as stressful. We can help each other out. So let's do that. Let's leave a lot of comments below, and I'll get in there and respond to a bunch of them, and maybe you guys can kind of talk to each other, and let's just support each other and get to the other side of this. So with that being said, why don't we jump into the stock pick that I have for you, and we'll kind of break a few things down. Drum roll, please. Stock pick is Shake Shack. Let's jump into the charts. All right, let's dive into the stock pick of the week. This just caught my eye today, and it was unbelievable, but Shake Shack showed this huge pop today, and it's just been running for a while. And then they had their earnings here. You can see if I hover this area right in here, and their earnings were estimated at 0.238, and they beat earnings at 0.27, and the stock just went crazy. So opened up this morning around 75.50 area, and then just blew up, and now it's trading up around 86.50. So Shake Shack has just gone nuts. And if we look at the chart here, let me go to the weekly chart. We'll start big and kind of drill down, but it's a really interesting chart pattern because they've done so well. They've been showing, if we hover these different earnings areas, they're beating earnings pretty consistently. I was just going back and do a little bit of research on them. They missed right there, but they beat there and they beat there. It's just they've been beating earnings quarter after quarter after quarter and just showing really nice growth. And this is one thing I like to do is I'll go back in the Thinkorswim platform and look at a bunch of data. You know, this is way back in 2015, and just start looking and hovering all these telephone icons and light bulbs, and it'll just tell you what they've been doing. Like right here, 17-cent estimated earnings, and they beat with an actual of 21, and that was on 11/1 of 18. So you can see, you can just keep hovering them, and you can see that they're just showing a lot of really good growth. And back here in June of last year and May, kind of maybe April through June of last year, they showed this big push up. And then Shake Shack had sort of a steady pullback, which, you know, could be expected as normal. And then it came down, touched, and then started moving back up and really hasn't looked back since. It's been unbelievable. So what we have is a nice scenario here where we got an establishment of a resistance area overhead. We came back down and then got back to that area and blew through it. Now that resistance area was $68.50, and now that it blew through it, pulled back and blew again, I feel pretty good about this being a possible support level. So the way that I'm going to be looking at Shake Shack moving forward is, being that the market's been beat up a little bit, things are a little interesting, I expect even more pullbacks moving forward. If Shake Shack is to pull back anywhere in this area again, in the low 70s, upper 60s, I think it's a great opportunity to get long Shake Shack and maybe write some covered calls. And if we go to the daily chart, same thing. It's just kind of a nice setup here with this being sort of our two touches to establish the resistance point. Then it moved back down like we saw on the weekly chart and then started running back up. And once it got to this level, you can see it was testing it,
was being held down, held down, held down, and then it just became too much pressure, too great, and it blew above, pulled back immediately and tested the level, and then ripped up higher again, sideways, and now we're trickling along, and then just got this explosion after earnings. So I do think that this is going to drift down tomorrow or the next couple days because this is a massive price increase. But we can take advantage of it when it shows us slowing down and starts to curl to go higher. If we get a decent pullback, Shake Shack could be looking really good to go long because it keeps beating earnings. The other nice thing about Thinkorswim is on this platform you can look at this news tab down here and you can open up news. And I actually pulled something up that I want to show everybody. I'll move myself up here for now. But if we go through some news on Shake Shack, it says it's currently up at $84.90. It's up $11.50 or 15.76%, which is fantastic. It's going to be the highest close since May 26th of 2015 when it closed at $85.76, and on pace for the largest percent increase since May 4th of 2018 when it rose 18%. It's unbelievable. So then we get Morgan Stanley, we get Credit Suisse, we get Barclays, we get Wedbush. They all raised their price targets for Shake Shack. And I've been kind of looking at that more closely when all the analysts come out and they change their price targets, whether or not they're valid, whether or not they're, maybe you don't agree with them, but they still did it. And it's still news, and it still caused the stock to respond. So when they move their price targets and they raise them, all these different analysts, that causes the stock to, and the buyers to feel more comfortable holding Shake Shack, which can help push it higher. So I see this as very positive, very bullish. Then if we look lower, it's telling us that on Monday they reported their better than expected sales and adjusted profit for the second quarter. And their adjusted earnings of 27 cents a share, which we just looked at on the other screen, was 4 cents more than what the analysts had expected. So it's a 4-cent beat, which is fantastic. They are saying that the $152.7 million in booked sales also beat Wall Street forecasts, and that's even better. A lot of times if you get good earnings per share, but you don't have sales that are sort of along or aligning with it, you can get some mixed feelings and the stock price can go down or stay the same. But when you get both of them that are sort of joining together and complementing one another, you can get a rise in stock price, which we clearly had today on Shake Shack. Currently it's up 3 of the past 4 days, up 86.91% year to date. Some might say, okay, I feel like it is overbought. We need to wait for a pullback. I agree. That pullback being that 68.50 level that we looked at. And I'll flip back over real quick. That pullback being in here, 68.50. I like that pullback area. So back to our news. Up 107% from its 52-week closing low of $41 on December 24th of 2018. That was not long ago. And then it traded as high as $85.45, which is the highest intraday level since the 26th of May 2015 when it hit $90, and then up 16.5% at today's intraday high. It's unbelievable. So this was all data, as you can see, as of 1:19 p.m. So great feature in Thinkorswim because you can have access to all these different news articles about whatever ticker you're looking at. So looking at Shake Shack, that just had me encouraged. Seeing this huge move on Shake Shack today was just wild, and I'm going to put it on my watch list now to see if we can get that pullback into that 68.50 level. And if we get that, I'm going to be encouraged to possibly take a long position on Shake Shack. I think it's got potential to go higher. It clearly can go to 86. So if we get any kind of pullback, I'm going to probably be holding through that high moving forward. So just a stock pick I wanted to throw out there. Again, all this is just my take on the market, my opinions, my tips, so take them all with a grain of salt. If you do have questions, though, I love to interact about them. I like to talk strategy. I like to take questions. I like to have you guys teach me things. A lot of times people will comment and I'll hear of something that I was unaware of, and it helps my trading grow. So I feel like this is a give and take on the channel as far as growing as a trader, or whether it's stocks, options, intraday trading, swing trading, whatever, ETFs. It's all gold. So, oh, and gold, by the way. take a peek at that today. So anyway, leave comments below. Hope you guys were green. I know some of your holdings, if you do have long-term positions, they're probably down. Don't panic. We'll get through it. We'll keep moving forward. We'll take it day to day, and we'll see you tomorrow.